Hi, this is Praveen. I am from Target Academy. So very big thanks to the students who are supporting Target Academy. At the same time, so we have conducted fast track classes recently, and we have also issued the free fast track material, colored material for CMA Inter students. So actually the program is very successful only because of you, and we have distributed around 500 books, set of books to the students, and still most of the students are registering for the free book. So of course we'll supply the remaining students also, but due to the printing constraint and also the other staff constraint, we are limiting the books to the particular level. Of course, we will distribute another 100 books for free of cost, and after that we will take the decision. And even though that book, whatever the book we have issued to the students, that made very huge success, and also it is very helpful to the students. At the same time, students are giving the comments that book, whatever the book we have prepared for the fast track classes, so that is very helpful to them, and that book is boosting their preparation. So these are the comments we are receiving from the students. So very big thanks. Same time, so we want to plan, we want to support the students regarding the exams, and also regarding the career, and regarding the CMA final coaching, everything we want to support the students. So through YouTube channel, so that videos and whatever the content so should be available to you. So only when you subscribe to the channel. So most of the students are not subscribing to the channel, so please subscribe to the YouTube channel, Target Academy YouTube channel, then only we are available to you. So let's start the video. First of all, this video is regarding direct tax amendments for CMA Inter students who are going to write exams in January 2023 exams. So there are only few amendments are there in direct taxes, but I have taken past 1 year amendments and I am highlighting those amendments, right? So let us start with the basic chapter, as it is a very beautiful amendment in basic chapter, that is alternative tax regime. So what is that amendment? Alternative tax regime. So what is this alternative tax regime? The name itself is telling it is alternative, it is option. So we have a basic tax rates are there, normal tax rates. So what is the normal tax rates? Up to 2,50,000 there is nil, 2,50,000 to 5 lakh 5% tax rate is there, 5 lakhs to 10 lakhs 20% tax rate is there, about 10 lakhs 30% tax rate is there. These are the normal slab rates. Of course, for a senior citizen the basic exemption limit is 3 lakhs, for super senior citizen the basic exemption limit is 5 lakhs. These are the normal slab rates. Sir, those persons who are taking that normal slab rates, it is okay. Through that persons, we are allowing deductions under Chapter 6A and headwise deductions also, and exemptions in capital gain. But sir, I have no deductions. I am not planning for any savings. I have no exemptions. So there is no exemption to claim in my profile. So even though I am not claiming exemptions, I am paying the 30% tax or 20% tax slab rate. For the people who are not having any deductions, who are having less number of deductions, so this alternative tax regime is very helpful. Summary, those individuals not having deductions, not having exemptions under capital gain, it is very advisable to take alternative tax regime under section 115 BAC. It is applicable to individuals and HUF, and it is applicable to resident or non-resident also. It is applicable from the previous year 2021. So what are those tax rates? Up to 2,50,000 nil, this is a common. 2,50,000 to 5 lakh 5%, this is also common. But here, from here the rates have been changed. 5 lakhs to 7 lakh 50, 10%, 7 lakh 50 to, so for normal people 5 lakhs above is the 20% rate. For these people who have selected for alternative tax regime, 5 lakhs to 7 lakh 50 is 10%, 7 lakh 50 to 10 lakhs is 15%, above 10 lakhs to 12 lakh 50 is 20%, 12 lakh 50 to 15 lakhs is 25%, above 15 lakhs is 30%. Sir, I think it is very tax rates are very low when compared to normal tax rates. So if normal case of scenario, if the income exceeds 5 lakhs, the rate goes to 20%. If the income exceeds 10 lakhs, the rate goes to 30%. But here 5 lakhs to 7 lakh 10%, 15, 20, 25, above 15 lakhs is 30%. I think it is very tempting. But do remember, if you are taking this alternative tax regime, you will not get these exemptions and deductions. You need to sacrifice this following list of exemptions and deductions. Sir, I'm a person, I'm not having any of these exemptions, only few exemptions are there, only few deductions are there in my account, so in my return, then it is advisable to take alternative tax regime. If you have any deductions or exemptions, then it is advisable to take normal case of scenario, not alternative tax regime. So what are the things you need to sacrifice? Leave, travel concession, exemption is there, sacrifice that thing. In in salary head, house rent allowance, sacrifice in salary head. So at the same time, allowances which are partly taxable, those exemptions will be sacrificed. You will not get exemptions, right? So allowance for income for minor, deductions for SEJ, at the same time standard deduction 50,000 in case of salary, you need to sacrifice that thing also. And IOBC in case of house property, additional depreciation in case of PZBP. So 32D, AD, 33AB, 33ABA, whatever the exemptions or deductions are there, weighted exemptions or weighted deductions, you need to sacrifice. Scientific research exemption, deduction under 35AD, deductions from family pension. So at the same time, chapter 6A deduction, no chapter 6A deduction is available. However, section 80 CCD and 80 JJA can be claimed. Those are the special things. 80 CCD, 80 CCD and 80 JJA are the special things you can claim. So if you are taking alternative tax regime, you will not allowed to take chapter 6A deductions except 80 CCD and 80 JJA. 80 CCD is nothing but a pension scheme, and 80 JJA is nothing but employment. So no set off and depreciation attributable to the profit. So if individual or HF not satisfied the following conditions, the cessation of rate shall be invalid. So whatever you have taken the discount rates, they are invalid. At the same time, choose either for the two tax regimes, either each year depending upon the liability. You can choose alternative tax regime for 1 year and normal tax regime for other year. So does not have a business income. The condition is you should not have business income. You should not have business income. If you have a business income, then there is no option. So that is the point here. It is excised in respect of individuals having business income. Option 1 excised cannot be withdrawn. So if you have a business income, that is have an income under PCVP, if you have taken this option, you can't get back with the normal slab rates to the next year. You need to continue it for the so remaining period also you need to continue it for the alternative tax regime. If do not have any business income, then it is your option. 1 year alternative tax regime, another year normal slab rates, it's up to you. Rebate under section 87A is available even SSC opt for alternative tax regime. As we will give rebate. So at the same time, tax special rates like 12A, 112A, 112, 20% and 10%. So these rates will applicable for the special income as usual. Same time, surcharge 10%, 15%, 15, 25, 37 will apply. It depends upon the total income as usual. Surcharge, special rates are as usual. Health and cess, cess is 4%. It is also as usual. So all those things have given for intermediate point of view, CMA Inter. So one thing you should remember, the rates. So up to 2,50,000 nil, 2,50,000 to 5 lakhs is a 5%, 5 lakhs to 7,50,000 10%, 7,50,000 to 10 lakhs 15%, 10 lakhs to 12,50,000 25%, same 20%, 12,50,000 to 15 lakhs 25%, above 15 lakhs 30%. You should remember these slab rates. So what is the slab rates? Alternative tax regime. This is important part for CMA Inter. They may ask for MCQs or bits. So this is regarding alternative tax regime, and another important amendment in basic chapter is domestic company can take 25% slab rates. Of course, it is a normal 25% slab rates if the turnover is less than 400 crores. Even though if your turnover is greater than 400 crores, you can take 25% as a tax rate if you opt for 115BA. So if you opt for 115BA, you can take 25%. Even though the turnover is above 400 crores. If the turnover is below 400 crores, then it is automatically applicable. 25% is automatically applicable. That is the provision. But if your turnover is greater than 400 crores, even though you want to take 25% as a tax rate, adopt 115BA. So if you want to take a 22% tax rate, adopt 115BBA. Sir, every person will take 22%, right? Every person, every individual or every domestic company will take 22% because 22% is less than 25% or less than 30%, but you need to sacrifice some deductions. So that is the twist here. So if you don't have the deductions, then it is obviously you can take 22% option. And option under section 115 BBA, 15%, 22% and 30% for certain special incomes. So for normal business income, it is 15%, 15%. For house property and all those things, 22%. For other incomes, it is 30%. So 15% is very lesser. So it is only to the specific companies who don't have any deductions under 35 AD, all those things. So normal provision is if your turnover is less than or equal to 400 crores, the tax rate is 25%. If the turnover is greater than 400 crores, what is the turnover year? Previous year 18. Based on previous turnover of previous year 18-19, you need to decide the tax rate. Based on turnover of previous year 18-19, you need to decide the tax rate. If the turnover is greater than or less than or equal to 400 crores, it is 25%. If the turnover is greater than 400 crores, it is 30%. And for foreign company, the tax rate is 40%. And for foreign company, the tax rate is 40%. So these are the things which have amendments in basic chapter. At the same time, so let's go to the second chapter. The second chapter is residential status. It's a very, very beautiful amendment and very important amendment is there in the second chapter. These 3%, this is not amendment, I'm just revising the point. These 3% shall be resident only if the status in India 180 days or more. Second condition, 60 days condition and 365 days in 4 preceding previous year condition. 60 days and 365 days stay in 4 preceding previous years condition is not applicable to following 3 persons. Who are those persons? First person leaving India for employment, only 180 days has to check. Person of Indian origin. Indian origin means his parents or great grandparents born in undivided India. So he is considered as Indian origin. If he is visiting India, then also first condition should be checked. Second condition is not applicable. Ship crew member. For the ship crew member also, second condition is not applicable. So Indian citizen, person of Indian origin. The amendment is, here it is amendment. For Indian citizen or person of Indian origin visiting India during the previous year. So as per the above provision, only we need to take 182 days period to decide the residential status. But if that person having income other than foreign income, he has an Indian income of 15 lakhs or more and he stays for 365 days in 4 preceding previous year and he stays above 120 days. If he stays for 182 days or more, then he is resident. No need to check all those things. His stay is more than 120 days in previous year, not 60 days, 120 days. And his income, Indian income is greater than 15 lakhs and his stay is 365 days or more in 4 preceding previous year. By satisfying these 3 conditions, then we should consider him as resident and not ordinary resident. Resident and not ordinary resident. In earlier, he should be considered as non-resident because he is not staying for 182 days. So only that condition will be applicable to decide the residential status. But now there is an amendment. You should check 120 days and Indian income 15 lakhs and 4 preceding previous year 365 days. If 3 conditions are satisfied, then he is resident and not ordinary resident in India. If any one of the condition is not satisfied, then he is a non-resident. So his stay is greater than 120 days, less than 180 days, obviously he is non-resident. But earlier it is 182 days. Earlier it is 182 days. If it is greater than 182 days, then he is resident. If it is less than 182 days, then he is a non-resident. But it is the amendment. So, right. Section 6(1)(a), if Indian citizen not resident in any country, Indian citizen is there, he is not staying 182 days in any of the country, he is roaming around the countries. So his stay is not 182 days in any of the country. So 20 days here, 20 days there, 20 days in other country. So like that he is roaming. That's why in India he is non-resident obviously because he had not stayed for minimum period for residency. In any other country he is also non-resident. So nowhere he is resident. That is the first condition. And his Indian income is greater than 15 lakhs. FI means foreign income. In total income other than foreign income means Indian income. total income other than foreign income means Indian income is greater than 15 lakhs, then he should consider as a resident and not ordinary resident. We should consider him as a resident and not ordinary resident. So this is a other thing. And these are the two amendments, very important amendments in residential status. Let's move on to salaries. In salaries, only one amendment is there. So for earlier previous year, the standard deduction is 40,000. Now it is amended. The standard deduction is 50,000 fixed amount. They have increased to 10,000. So of course, this is not amendment for the latest exams. It came for the past examination, but I am highlighting that thing. So those students who have prepared for 1 year back, they will change their amounts by solving the problems. They might have taken 40,000 as a standard deduction, but the standard deduction is not 40,000 in salary head, it is 50,000. This is the latest one. So everything is same. So house property, in house property there are two amendments are there. First one, for self-occupied property, earlier they have allowed only one property, but now they are allowing two self-occupied properties. So, and third one, if you are occupying two self-occupied properties, they are allowing, but earlier they are allowing only one self-occupied, another one should be taken as deemed to let out. But now two properties can be taken as self-occupied, and if third one is there, even though you are self-occupying, they will take a deemed let out property and you need to pay tax. So that is a two thing, and you need to consider third one as a self-occupied deemed let out. Either among the three you can select any property as deemed let out. So you need to calculate for every option. If the first house property is let out, then what is the tax amount? If second house property is taken as deemed let out, then what is the tax amount? And if third property is taken as deemed to let out, then what is the tax amount? So whatever the option you get the less amount of tax, then select that one. You can change the option for year to year basis based on the comfortability of the SS. That is the amendment is there for the income tax house property. And another beautiful amendment is, so earlier if you are a real estate owner and you have a stock in hand, so what is the stock in hand for real estate builder? So real estate builder, the stock in hand is apartments. The apartment will not be sold within 1 year, right? It will take time. Sometimes it will take 2 years, sometimes it will take 5 years. So it is not a bread, it is not a job, or it is not a chicken selling within 1 hour or within 5 minutes. So it take time. It take time to sell that flats, and they are the stock in hand. For the meanwhile, he can give that apartments for rent. Whatever the rent is collecting, it is exempted for 2 years. Earlier they are giving only 1 year, but now they are giving 2 years to encourage the builders. So they are giving 2 years exemption. So the 2 years is the amendment here. The 2 years is the amendment. So PGBP. In PGBP, the exemption is for scientific research. There are weighted deductions are there. First of all, earlier 2 years back, it is 200 weighted deduction. After that, they made 200 as 150%. Now it is over. Everything is 100%. If you are doing scientific donations or scientific research for yourself, only 100% deduction. 100%. Whatever the donation you have made, 100% of the donation is allowed as deduction. But earlier it was weighted deduction, 200%. If you are donated 100 rupees, they will give 200 rupees as deduction. Nowadays, no. So to encourage that scientific research donation, they have made that provision. But nowadays, so it is over. So everybody has awareness regarding scientific research, and they are doing all those things. So because that's why they have mentioned it as 100%. That is the amendment. In capital gains, in case of so appeal or 50C, you need to take 110% of consideration, not 105%. You need to compare 110% of consideration to the SDV. So if the 110% of consideration is less than SDV, that means if the SDV is greater than 110% of consideration, then we need to take SDV as a full value of consideration. In the place of 105%, you need to take 110%. So regarding section 54, there is amendment. What is section 54? Section 54 is regarding if you have sold a residential house property and if you have any long-term capital gain, and if you are individual or SGF, then you have an exemption if you have invested that capital gain in purchasing of new house property within 2 years in case of purchase, within 3 years in case of construction. Earlier they have allowed only one residential property, but now they are allowing two residential properties if the capital gain is less than 1 crore. If the capital gain is more than 1 crore, then they are allowing only one house property. Only to the people whose capital gain is less than 2 crores, then two house properties are allowed to purchase, or two house properties are allowed to construct. So for the two house properties, they are taking it as an investment in house property. So earlier they take only one house property as an investment, and another house property they will not take as an investment, and they will not give an exemption under section 54. So now under section 54 you can invest in two house properties if your capital gain is less than 2 crores. So if your capital gain is less than 2 crores, you can invest in two house properties and you can get exemption. So whatever the amount investor or capital gain, whichever is less, is the exemption. So if you are not, actually there is 2 years time period, right? So if you want to purchase the another house property with this capital gain, 2 years time period is there. If you want to construct, 3 years time period is there. So I am telling to the department, sir, I will invest in next year, please give exemption this year. No. So how can I rely on you? You need to deposit that amount in the capital gain deposit scheme within ITR period, within the due date of ITR. Then only I can rely you can invest, or you will invest in the property in future years. If you are not depositing, then I will not rely. If you are depositing in the capital gain deposit scheme within the due date of ITR, then I will rely and I will give you the exemption. So in case you are willing to invest in the house property in future years, you need to deposit that capital gain in the capital gain deposit scheme with deposit scheme. So within the due date of filing of ITR. If any of the asset or that house property has sold within 3 years, so it is a significance that you have invested in that house property only to take exemption. You need to hold that house property for minimum 3 years. If you have sold that new house property within 3 years, then the entire exemption is get reversed by way of reducing cost of asset while calculating capital gain in the new asset. So if you are selling that new assets, you need to calculate capital gain. So you have to reduce that exempted whatever exemption you have taken, you need to adjust that amount to the cost of acquisition. So indirectly they are taxing that exemption, right? So 1 minute. Right. Right. So next one is a slum sale. So in case of slum sale, there is one amendment is there. So while calculating the slum sale capital gain in slum sale, the formula is net consideration minus net worth. In case of net consideration, you need to take FMV as on the, what is net consideration is a sale consideration. So you need to take FMV1 and FMV2, whichever is higher. So question will tell the fair market value 1 and fair market value 2. Fair market value 1 means market value with the perspective of purchaser, market value with the perspective of seller. So you need to take the highest amount, whichever is higher, as a fair market value, and take it as a net consideration, and reduce the net worth of that assets. And net worth means is the book values, and you will get the capital gain. It's very simple thing, market value minus book value. While taking the fair market value, you need to take a highest amount. So what is the market value with respect to the purchaser's perspective, and what is the market value with respect to the seller's perspective? Compare the both, and you need to take the higher amount. So there is an amendment in capital gain, and amendment in income from other sources. Gift is very important. Gift. So in case of you received cash gift up to 50,000, it is exempted, and the gift to the relative and gift on occasion of marriage are exempted. At the same time, the whole sum is taxable if it is exceeding the 50,000. Even give cash means bank checks, ECS also will come under cash. So without consideration, in case of immovable property, you are transferring immovable property without consideration, you need to take SGV. If the SGV is greater than 50,000, it is taxable. In case of inadequate consideration, there is amendment is there 10%. So 50,000 or 10% of actual consideration should be taken as criteria. If the difference amount, whatever the discount you have given, if the discount or difference amount is greater than 50%, 50,000 or 10% of consideration criteria, then it is taxable. If it is less than that criteria, then it is not taxable. How should you calculate that criteria? Earlier it was only 50,000. After that they have changed it as a 50,000 or 5% of consideration. Now they are asking to take 10%. So like a capital gain, they have changed it 5% to 10%. Here also they have changed the 5% to 10%. 50,000 or 10% of consideration, whichever is higher is the criteria. Compare that difference amount with that criteria. So if you are getting the higher amount than criteria, then it is taxable. If you are getting the lesser amount than criteria, then it is not taxable. So that 10% is a exempted thing. If the aggregate amount of fair market value is 50,000, in case of immovable property compared with the 50,000, there is no change in that thing. So here another point is there, if the gift to the relative is exempted, not taxable. If gift to the on occasion of marriage is not taxable under will or inheritance, gift through trust or local bodies, and holding to subsidiary, 100% subsidiary to holding, not taxable. These two are amendments. Gift from class of persons as may be prescribed by CG, gift to the trust for benefit of relative. Gift from class of persons as may be prescribed by CG, gift to the trust for the benefit of relative. So we are creating the trust and making the relative as a beneficiary to the trust. That is indirectly we are giving gift to the trust relative. That's why it is exempted. And some certain class of persons, if government have certified certain class of persons, then also gift is exempted. So this is another amendment in case of section 9, gift to the non-resident. If the gift value is greater than 50,000, so deemed to accrued or erased in India, even though they have received the gift in outside India, if the gift value is greater than 50,000, then so gift is less than 50,000 outside India, deemed to accrued or erased in India if it is greater than 50,000. So less than 50,000, greater than 50,000 class. It is taxable in India if gift value is 50,000 even though he received outside India. So there are amendments in TDS and TCS. 194P pension, P for pension. Specified banker need to deduct TDS, So rate is a slab rate, applicable slab rate. There is no limit. So individual senior citizen 75 years or more having pension. So it is applicable to the senior citizen having 75 years or more. So they need to, specified banker has to need to deduct the TDS under section 194P. Applicable tax rate is a slab rate. Exception, no other income excludes no other income excludes the interest income receivable or received for such bank if declaration is provided. For example, that senior citizen have other income, then this provision will not applicable if that other income includes the interest also, right? So but he is getting only the interest from the bank, so that specified bank with respect to this pension, then that other income should not be considered, and he need to give the declaration. That senior citizen has to give the declaration. Deductions under chapter 6A, rebate 87A is allowed under declaration actually. So while giving the declaration, the deductions and rebate will also allowed. So 194Q is important for the final CMA final students, not for inter students. What is 194Q? So it is applicable to the buyer or purchaser in case of TCS 1206C 1H. This is a tax collected at source. This is a tax deducted at source. It is applicable to the seller from 2021 and 2020. It is earlier. It is applicable. When deduction are needed, payment or credit, whichever is earlier at the time of receipt, TDS rate 0.1%. So if PAN is not given, 5% in case of 1%. Triggered point, turnover is exceeding 10 crores if the purchase of goods aggregate value is exceeding 50 lakhs. So in case of buyer's turnover should exceed 10 crores during the previous year. buyer's turnover should exceed, and purchase of goods value should exceed 50 lakhs. Turnover should exceed 10 crores, and the purchase value of the goods should exceed, so on which the TDS should be deducted. So if it is beyond 50 lakhs, then only TDS should be applicable. Up to 50 lakhs, TDS is not applicable. And another condition to applicable, the section will apply if the turnover is greater than 10 crores. If the turnover is not greater than 10 crores, then section will not be applicable. Only to the people whose turnover is exceeding 10 crores, then only 194Q is applicable, or 206C is applicable. 206C is applicable. Only to the amount which is in excess of 50 lakhs. Only to the amount which is in excess of 50 lakhs. So exclusion, GST is excluded. That is the amendment. There is an example I have given. 12 crores is greater than 10 crores. 9 crores is not greater than 10 crores. That's why not applicable. In case of 12 crores, it is applicable 0.1%. So to on which amount greater than 50 lakhs? 50 lakhs. So 8 lakhs is a greater than amount. On 8 lakhs, TDS is applicable. 8 crores, TDS is not applicable. 11 crores greater than 10 crores. That's why TDS is applicable. On which amount? 3 lakhs, 0.1%. 9 crores, both are less than 10 crores. TDS not applicable. 12 crores, 50 crores, both are greater than 10 crores. But if TDS is deducted under section 194Q, then there is no TCS deduction under section 206. Either this one or that one. 206CC is nothing but applicability with respect to 1420. If the amount is greater than 7 lakhs, then so remitting outside India, then TCS is 5%. You are remitting means transferring your funds outside India. If the amount is greater than 7 lakhs, then 5% TDS is applicable. Next, return on income. Return on income, there are applicable. Compulsory return is applicable. There are 2 points are added. So another points, if compulsory return is applicable, if the business turnover is greater than 60 lakhs, profession turnover is greater than 10 lakhs, you need to file compulsory return. Other than if you are company or partnership form, you definitely need to file, even though 1 rupee turnover is there. If you are not a company and if you are not a partnership form, if you are individual, then your business turnover is greater than 60 lakhs and your professional turnover is greater than 10 lakhs, then that return of income is compulsory. And your TDS during the period, during the previous year is 25,000 or more, greater than 25,000. In case of senior citizen, 50,000. If anybody have deducted TDS greater than 25,000, you need to file a compulsory return of income. These 2 points are added in the Finance Act. So these are 2 amendments are very, very important. So earlier they have added another point. So if your electricity bill is greater than 1 lakh and your foreign travel bill is 2 lakhs, you need to file a compulsory ROI. Now this year they have added 2 points. If you are individual and having the business turnover greater than 60 lakhs, and if you are professional and having a professional turnover greater than 10 lakhs, you need to file compulsory return of income. And a person having a TDS is greater than 25,000, and in case of senior citizen 50,000 TDS or TCS, then you need to file a compulsory return of income. Next, fee for a subsequent intimation of, sir, you need to intimate Aadhaar to the income tax department. In case of delay, there is a fee penalty up to 31st March 2022. No fine. So from 1st April 2022 to 30th June 2022, 500 rupees fees. So because if you have not updated Aadhaar in your income tax profile, the return will not be filed and the validation will not be done. So you need to validate your return. You need to link the Aadhaar with the PAN number in income tax department. If you have not linked your PAN number with the Aadhaar, then you need to pay 500 rupees up to 30th June. It's over, right? Now it is 1,000 rupees. So there is a change in the due date. The due date of companies have changed from so of course it is 31st October, right? So 31st September to 30th September to 31st October, they have changed it to 1 month and everything is same. They have changed that 30th September to 31st October. That is the amendment. 31st October. Everything is same. So that is another amendment. These are the amendments for the January 2023 attempt. So my point of view that due dates and this compulsory return of income and so this thing is not important. I think 194P is important. This resident gift is very, very important. Gift is very important. Entire gift is important. And next, exemption 54 is important because it is amended. Next, regarding house property, salary 50,000 is important, and this one is important, residential status. These are very, very important, and alternative tax regime slab rates. So these are very important amendments for January 2023 attempt. All the very best for your attempt. So don't be panic, and relax, be cool. There are only 20 days for your exams. Be cool and calm. Whatever you have prepared, that is enough, and whatever you have not prepared, that is not necessary for exams. Think like that, and try your level best in these 20 days, because these 20 days are very, very important. So whatever you have studied in these 20 days, they are very, very helpful to your exams. Especially last 10 days are very, very important for your exams. Whatever you have prepared till now is only 50%. Whatever preparing for these 20 days will contribute another 50%. So because these will increase your confidence levels. So don't lose hope. Try hard, and you will definitely succeed. All the best. Bye.